What's up, everybody? Welcome back to Invest and Talk. I am Denny Chow. Today we're going to be talking about the market. Here in Invest and Talk, we like to do one thing. Let's talk. All right, so before we begin, we just want to go over a couple of things again. Number one, you got to hit that subscribe button. Number two, leave me a thumbs up if you like this content. And number three is just a disclaimer that this channel and what I'm saying is just my opinion backed up with facts. All right, so earnings season has started. We came out with the banks today and it was kind of a mixed message because not down a lot, not up a lot. You had Wells Fargo's that came down about 5%. JP Morgan and Chase was up, then it kind of pulled back a little bit. The market was down at first and then went up. It was just been a crazy week. Right now, we're just digesting all the news. And I did want to read you guys some of the facts that were brought up on the JP Morgan Chase and some of the other banks' earnings that I want to go over that you might have missed because you guys don't pay attention to the earnings. So let's go over that real quick and let's just see what we can interpret of these earnings right now. All right. So this article is from Hugh Sung from CNBC. Some of the key points they went over is JP Morgan posted first quarter profits well below analysts' expectations. The bank reported, which is JP Morgan, a 78 cents earnings, which was well below what a 1.84 estimate. And right here, just stop right here real quick. That is a huge difference. So analysts, they do their calculations and they were expecting a 1.84 per share earnings, and they only gave out a 78 cents, which is a huge miss. But here comes something that's interesting is that the company added 6.8 billion to loan loss provisions. So what this is not that they actually lost the 6.8 million. These are called since I'm an accountant, these are called Contra Accounts. So Contra Accounts aren't actually on balance sheets. They are just a secondary account that is going to offset anything that's on a regular account. For example, if you had a building that is worth $100 million, but we know that buildings depreciate. And so what you do is you set a contra account of depreciation on it, and whatever method that you use, you accumulate it, and at the end of it, you take that and you subtract it from the building, and that will kind of give you an idea of how much the building is. And so right now, they're trying to start a contra account to offset some of the loans that may not be received from the people they loaned out to. So let's continue reading. All right, as we go down here, the earnings drop was caused by the massive 6.8 addition to the bank's credit reserves, which I was talking about. The move signals the management expects a surge in defaults across the businesses, real estate, consumer division to energy, retail, loan operations. So right there, let's stop right there. That right there is telling you some of the markets, some of the sectors that you don't want to be in right now. So real estate, they're expecting a huge default. I don't know if that's, what direct real estate. Are they talking about commercial or are they talking about the residential? But just real estate, the loans into commercial operations. I guess that is the commercial real estates. And energy. Bright spot for JP Morgan, it states that trading division posted a 32% increase in revenue, recorded at 7.2 billion. Bond trading revenue surged to 5 billion. So, the market did this crazy V-shaped recovery in JP Morgan. Of course, they are in different subdivisions where they have a group of people, or I don't know if it's, 100 or 1,000 people that trade on these markets. And pretty much when the money you put towards them in savings accounts or CDs, they take that money and they aggressively use it to try to gain market shares and try to make money in the stock market, which did really well for them. This is what I wanted to point out is no other than CEO Jamie Dimon himself. I quote, "In the first quarter, the underlying results of the company were extremely good. However, given the likelihood of a fairly severe recession, it is necessary to build credit reserves of 6.8 billion, resulting to a total credit cost of $8.3 billion for the quarter. So that is Jamie Dimon, one of the most profound and well-known CEOs, especially in the financial business. And we have to respect that because Jamie Dimon he just had some type of surgery not so long ago. So people were kind of worried about how Jamie Dimon was going to be able to go back on the board, or he was just going to have to resign. But he is a very well-known person that people listen to. He is the one that tells you what it is. He's not going to sugarcoat stuff. And for him to state something that he expects a severe recession if we're not already in one. So he's saving an $8.3 billion reserve just in case, which is really prudent because if you don't need this, you can pretty much just put it back on your books. But to set that aside shows you that, number one, how smart and how conservative he is, that just in case something happens. But number two, the most important is to give an idea of what these CEOs are thinking right now. So right now, we're kind of skeptical on what the future is going to bring to the market and to people's lives because of this pandemic. If the jobs are going to recover, or people are going to go out and spend, or people are going to default. So because we have those results, it's still a little bit mixed in my opinion. Because of the pros and the cons, it kind of just balances itself out. On one side, you're thinking that, okay, these banks are well off because they're not only putting money aside, they're adding more money to that just in case something happens. But on the other end, you're asking yourself, why are they putting so much money aside? They are way smarter than I am, way smarter than most people out there. They've been in the markets for so long, and they're not only in the markets as far as the stock market, they are the people that keep the average American's money. They have foreign investments. They have companies all over the world, so they know what's going on. And for them to put a lot of capital up, it is a little concerning, but at the same time, it shows that this is not the 2008s where the banks are going to be needing help from, the Federal Reserve to be bailed out or anything like that. So I'm not considering a huge drop or anything like that. Right now, again, I'm just neutral. I'm just waiting on some more earnings to come out to see what the results are. But I am looking on a couple other stocks. Again, I am 90% out of the market right now. I have a little bit in the market just in case something happens, but I am thinking about a couple companies that I am going to be buying soon, so stay tuned for that. Again, if you guys enjoyed this video, please leave it a thumbs up. Please make sure you subscribe to this channel, and thank you again for coming, and I hope you guys have a blessed day.